I'll bring into the conversation Kevin Hincks is with me to talk about the big picture here. It's good to see you, Kevin. We are seeing here still up arrows across the board. Right now, the Dow's up 161 points. It's gaining. It had been up 114 points. So stocks are going higher. The bond yields moving a bit higher. Some of your reaction as the Fed cuts rates 25 basis points.
So here's the main headlines from today. Yes, they cut 25 basis points. Two dissents, Nicole, one on each side. Schmidt favored no cut, and Myron wanted 50 basis points. So that shows you the volatility in this number. Also, the Fed will end QT on December 1st, quantitative tightening. MBS redemptions will be invested into T-bills after that. So that means quantitative tightening meant when things were maturing, they were not being rebought. They're now going to start being rebought. So that will probably help the market as well. So two really big headlines today. Dissents on both sides and the end December 1st of quantitative tightening, Nicole.
I think that's really interesting. I mean, Myron, we knew he would go for 50 again. That's what he did last time. But you had Schmidt with no cut. I mean, there certainly has been this unified presentation by the Federal Open Market Committee. People aren't faltering too much, like Waller and Bowman. I mean, they could have said something different, but I guess the 25 is what they wanted. Policy Committee is attentive to risks on both sides of the dual mandate. The Fed has said judges downside risk to employment to have risen. And so that is why they have justified this 25 basis point cut. Inflation has moved up since earlier in the year and remains somewhat elevated. What do you think of that?
I think that the mild CPI data that we got on the 24th allows the Fed to focus solely on the labor market. And I think that focus is why the Fed, at the end of the day, cut by 25 basis points and will probably look to cut in December as, late morning it was 87.5% chance of a cut in December as well, Nicole. So, yeah, I think the path for interest rates is now lower. I think the focus on the labor market, I think Jerome Powell, when he speaks today, will probably certainly talk about the end of quantitative tightening, but also have to admit that he doesn't have the data to look through. But the data that he did get, the CPI data, was soft, better than consensus. So he does have a mild case of inflation. Both the CPI year over year and core year over year were both around 3%, not at our goal at target, but he's probably going to make the case that he doesn't have to be as restrictive as he was moving closer to neutral, Nicole.
Yeah, and I mean, is there anything you're going to be hearing or listening for in the press conference from Jerome Powell at 2:30 p.m., which we will have here on the network? What will you be listening for, if anything in particular?
Certainly his views on interest rates going forward. Do I think he'll be, transparent in that? No, probably not. I think you'll hear many times that I don't have enough data to make decisions like that right now, or he's waiting for more data. Will he comment on the government shutdown? I think he'll talk a lot about quantitative tightening. He'll be asked about that. And he'll, of course, probably be asked about the dissenters as well. So, yeah, I think the markets may get frustrated with how much information Jerome Powell gives out because of the lack of information, the lack of the government being opening. But I'll look for anything that he makes, any statement that he makes with any type of opinion, Nicole.
Yeah, pretty exciting here. A lot of what we expected, but still some parts of it that we didn't necessarily know. So definitely interesting here as we're getting this breaking news. Stocks have now moved lower than where we started this show. Kevin Hincks, thank you.